this might sound a really controversial thing to say, but I'm going to say it anyway because my PR team are not here with me. I can say this because I'm unregulated, and frequently do say this because I'm unregulated.
Don't want to advertise all of the lenders out there, but family building society have become huge for us. Absolutely
we're on the Building Societies episode, so you can say as many as you like, mate.
Excellent.
It's fine.
I tell you what we do have, Monty, and one of my colleagues will really thank me for saying this. There is actually a Building Societies Golf Association.
Don't tell them that, Paul. Don't tell them that.
Clearly, if these innovative products were at the top of Best Buy tables, then it would fall over. And this is something that I've wrestled with over a period of time, and it's something that I really want to do a bit more of. Support.
Hang on. Hold on a minute. Hang on.
Hello, Andrew.
Hello, Andrew.
I'm such a con. You can put this in there. I am officially a con. Stop this.
Do you think Monty was at his Christmas lunch or something? Welcome to the Mortgage Mingle Podcast, the podcast made by mortgage professionals for mortgage professionals. Today, we're diving into the world of building society mortgage lending with Paul Broadhead, a leading industry voice and head of mortgages and housing at the Building Societies Association. The BSA serves as the voice for building societies and credit unions, advocating for fairer financial policies, driving innovation and promoting responsible lending and savings. Since its inception, the BSA has helped its members navigate everything from regulatory changes to housing market challenges. They champion affordability, decarbonisation and financial resilience while ensuring that the unique mutual model where customers come first remains at the heart of the financial system. Paul has led this charge since 2008, becoming a trusted commentator and advocate for smarter housing solutions. Outside of work, he's a proud dad and a loyal Northampton Town supporter, bringing both professional expertise and personal values to everything he does. Before we start today, a couple of announcements. Firstly, we are delighted to be joined by Emma Hall, who's the key relationship director at Move In Legal, no G. And we're also in association with the new publication, Mortgage Soup, that everyone's excited about. So, exciting times. And we're very proud to be associated with the guys there. Paul Broadhead, welcome to the Mortgage Mingle podcast. We really appreciate you joining us.
Thank you. Thanks for the invitation.
Lots to unpack in all the years that you've been at the Building Societies Association, and I wonder how many mortgage brokers even know there is a thing called the Building Societies Association. Do you get many brokers coming up to you and saying, "Oh, so what do you do then?"
We do a little bit. I mean, I've spoken at quite a few conferences broker facing over recent years, so I think we're better at that. But I think to myself, it doesn't really matter if brokers know who I am and who the BSA is. The important thing is that they know who the building society sector is and how they can help them fulfil their customers' needs. So yeah, I've had some interesting conversations over the years, and even have a new policy manager in my team that we recruited earlier this year that I think 12 months ago didn't know who the BSA was. So we're making progress, even if it's one person at a time, Paul.
Yeah, no, Absolutely. You joined the Building Societies Association in 2008, Paul. Is that correct?
I did, yeah, 16 years, just over.
And so before that, you were at the Halifax?
I was at the Halifax. I was also at another trade association for a short period of time between the two, yes. But I've been in mortgage lending most of my career.
Yeah. And like the rest of us, did it just draw you in? Or was there something? What got you into the world of mortgages in the first place?
Well, so it's yes, I suppose is a short answer to your question, as tends to happen. I mean, I didn't sit at school thinking actually I want to be in the mortgage market particularly. I mean, I wanted to be a footballer, right? I still harbour those dreams actually, but I think I might end up being disappointed.
What position, Paul? What position?
I was centre. Well, I started off on the left wing, then I was centre midfield, and then as everybody does, I went back to centre half, and I went all the way back. I couldn't catch, so I didn't make a goalkeeper. But yeah, so I started off, and I thought I saw a job advertised at Halifax. And my mum at the time worked part time in one of the branches. I waited for her to go on holiday because I didn't want to be a nepo baby just before that term was invented, and applied for a job there. And I thought this looks really, really interesting to join. And I'll get into this, and I really enjoyed the mortgage market. And I thought, well, I'll stick around here until I get a proper job. And I'm still kind of looking for that proper job, so I've never left.
So did you just see an advert for the Building Societies Association?
Yeah, so when I joined the BSA, it was quite interesting because I'd been at the Halifax for 11 years. So my last meaningful role at the Halifax was putting mortgage regulation into Halifax and Bank of Scotland back in 2004 into the back office systems. And I was called up by my then boss, a guy called Phil Jenks, as some of you will
Yeah.
back
in the press again recently, but
yes.
It's not a building society, so we won't talk about it.
Yeah. And he said to me, well, kind of what next after mortgage regulation? And I said, well, I'm going on holiday, first of all, Phil. He said, well, after that, he said, do you fancy a secondment? And I thought, secondment? And I was then seconded to what was then the office of the Deputy Prime Minister, which is now the Ministry of Housing, to help them with industry engagement on the Housing Act, what became the Housing Act 2004, which brought in home information packs, amongst other things. I did that for 18 months, then went back to Halifax, and I was asked to go and be Deputy Chief Executive of a trade association in that space, which I did for a period of time. And then I was travelling down to London it was on a Sunday afternoon, and I had the Sunday Times in front of me. Remember those days when you used to sit on the train with an actual paper? And I saw this role at the BSA saying, actually, we're looking for somebody to set up a mortgage team. Because at the time, the BSA didn't have its own mortgage team. It deferred to the Council of Mortgage Lenders since they got independent of the BSA in 97. And I thought to myself, well, actually, I've been a mortgage lender for a number of years. I'm employed as Deputy CEO of a trade association currently, and I've done 18 months in government. So that sounds like a job that I'd really relish, particularly given it was a blank canvas at the time. So I applied for that job, and 16 years later, here I still am.
I mean, that's amazing, isn't it? That particular day, you're reading the paper, and then that ad there is obviously meant to be made for you.
Yeah, absolutely.
So let's talk about the Building Societies Association. What does it do? Who does it represent? And why should we care?
So we represent mutual building societies and 7 credit unions. So we're now all UK building societies, all 42 of them, and 7 large credit unions. Historically, it was building societies only. And our purpose really is to champion the interests of all of our mutual members effectively. So what does that mean? So, well, that does mean we are the key conduit for the sector with government. So when you've got government coming in looking to improve the plight for first-time buyers, for example, or to help people facing payment difficulties, or all of the additional support schemes that were put in place during COVID, we act to represent our members' interests doing that. We also support them to implement mortgage regulation and also work with the regulators to ensure that, 1, that's fit for purpose, 2, can be implemented and deliver the outcomes that they're seeking, and 3, and I think potentially one of the most important things, is it enables innovation. It doesn't stifle it, because what we don't want is the industry standing still. And of course, we also work with many other trade associations. So the Association of Mortgage Intermediaries clearly being a key one for the broker sector, because that feedback from brokers in terms of where there are gaps in the market, where there are customer needs that are unmet, really help us then to support to innovate.
Hold on a minute. Hang on.
Hello, Andrew.
Hello, Andrew.
I'm such a con. You can put this in there. I am officially a con.
Do you think Monty was at his Christmas lunch or something?
Oh, dearie me.
I suppose he didn't turn up with like a hat on, a party hat.
Oh, it's gone. He's had enough.
He's restarting. Before we were rudely interrupted, Paul, so we were talking about the association and who it helps and why we should care. And you were talking about innovation. You were talking about innovation within the mortgage world, and talking about the regulator. A lot of people would say the two don't go hand in hand, but they should. What sort of frustrations do you get when you are talking to the regulator about looking at potential innovations?
I think it's the lack of pace of change historically. Although I must say, I mean, currently they've recently had a call for input out following the implementation of Consumer Duty and how that interacts with MCOB, and I'm optimistic that they're kind of serious about doing some of this. We have an annual mortgage meetup, which is effectively a mortgage conference for the sector, and I had Tom Francis from the regulator there, and I was challenging him on how meaningful the FCA review might be, how thoughtfully they might think about it, and how quickly they might move. And he said to me, if there are areas where MCOB is seriously hindering innovation, we want to hear about it. Give us those examples. And I think my starting point for that piece of work is you've got consumer duty now that gives you those high level principles of a consumer outcome. You've got a regulator that talks about being an outcome focused regulator. And if that's the case, do we need the reams and reams of NCOB that give everybody the same route to achieve those outcomes? Or can we introduce some flexibility? And I think, we're now 10 years on from the mortgage market review. It seems to me, following the implementation of consumer duty and the fact we're a decade on, that now is the time to start thinking about, okay, how fit for purpose is that regulation? It was of the time, it was post-crisis. We're in a very, very different space now. And look at the tech, look at the way the mortgage market, the shape of the mortgage market and the products in that market have evolved over that 10 years. So let's take this seriously to undertake that review.
So you're effectively saying, look, we've got consumer duty that covers, if you like, high level. As you say, it's all about customer outcomes. So basically, all of this, all these reams of information and pages in MMR, can't we now not totally do away, but condense, abridge, because we're working to an outcome rather than the actual process itself? Is that what we're talking about?
That's exactly what we're talking about. And I think, you can go one end of the spectrum. You can say, in that case, let's tear up MCOB. We don't need it. We're out.
That'd be good.
I think that's probably is a step too far. And actually, what regulation does do, it gives you the guardrail. And actually, I think to me, it should be, rather than a crossing every T and dotting every I, it should act as that guardrail to give firms confidence about where the regulator's expectations are. I remember during the MMR, having a number of relatively robust conversations back then with the FCA. And I held my hands up and I said, look, with people like me, you can't win. Because I'll ask you for principles-based regulation. Give me that, I'll want guidance about what you mean. And if you give me rule-based, I'll tell you that you should give me principles. So it has to be something that's in between, that enables innovation, but provides firms with the confidence about how something's going to be supervised. Because if you don't get that, the regulatory intent might give you sort of parameters like this. Till lenders know how that's going to be supervised, actually it has the impact like this. So it's a real tricky balance. But I think, you've got a government that's intent on improving a lot of first-time buyers. It's got a government that's intent on reviewing how detailed and stifling potentially that regulation is. And you've got an industry that really wants to do the right thing by consumers, both from a lender perspective and from a broker perspective. So I think it should not be beyond the wit of all of us collectively to sit down and deliver something that makes it easier for firms, better for consumers in terms of innovative products, and maintains that competitive landscape.
Lee, you were just talking about some of the content that Paul put out on LinkedIn before we started. Yeah. Do you want to just talk that through and remind us of that? Because I think it was quite some striking information.
Yeah, some fantastic information on there. So this information ran from March to September this year. So looking through this information, it said building societies' mortgages balance grew by 11.7 billion in the last 6 months, accounting for 72% of the mortgage market growth. The one I particularly liked was building societies provided over 63,000 first-time buyer mortgages in the last 6 months, which is amazing to read. I mean, first-time buyers need support more than anyone right now, especially as we're coming up to the end of that first-time buyer stamp duty holiday. We're all trying to push them through. But to see the assistance that's come from building societies, and I think brokers will all say this, we've really seen not so much a lot of innovation, but obviously you've got Nationwide with their 6 times income that they're doing for first-time buyers, which is great. But the need for manual underwriting, which seems to come more from mutuals than it does from anyone else, has been fantastic. So just seeing these figures that you've put out there, it's really, really encouraging to see the support you're giving to first-time buyers. So a massive thank you from all the brokers, which I think are probably using building societies probably more now than they ever have done.
Yeah, I think that's right, and thanks, Lee. I mean, I think the sector's doing a sterling job in supporting first-time buyers. We also did some research into the first-time buyer market earlier this year, which made a number of recommendations. But you touched there on the innovation point, and I think first of all, the manual underwriting is key, because you need to be flexible. There are many people that are very creditworthy but don't fit into a straight-through process. We need to make sure that they're served, and I think our sector does that really, really well, and that's reflected in the numbers. But I think also on the innovation side, we touched earlier when Paul asked me, the kind of why brokers should care about the BSA. And it's really about that broker feedback that talks about what some of the challenges are facing first-time buyers in the market. And if you just look at some of the innovations that we've seen Nationwide come out with its 6 times income, its helping hand mortgage. We've seen Skipton Building Society come out with its track record, it's no deposit. We've seen the 5,000 deposit mortgage from Yorkshire Building Society as well. And we've also even seen, the Cambridge Building Society has a really innovative scheme called Rent to Home, where they own a property, they rent that out, and then you'll get a proportion of that back for your first deposit. So actually there was a lot of innovation in the sector.
Wow, that's really cool.
Yeah, that not all brokers know about. Now, clearly all of this isn't hugely scalable, but all of this adds into the mix to make sure that if you're a creditworthy borrower, you are likely to find an answer, not from every building society, but you're likely to find an answer to your needs within the sector.
Yeah, just to echo Link's point,
pretty proud of.
It's interesting, isn't it? Because more and more innovation is coming from the building society sector, and we as brokers are looking there more than we probably have ever done, because that's the sector that's solving the issues. We're seeing some of it from sort of the big six, but it's all mainly coming from those, whether it's Suffolk Building Society or all of those types, Leeds, etc. They're the ones who really seem to be understanding their members' needs and reacting to it by putting out their products that we as brokers have been crying out for a long time.
100%. It's really nice to hear, like when we're speaking to the team about, cases come in, you get your complex cases, and, you're hearing, have you spoken to Family Building Society about it? Have you spoken to Cambridge about it? Have you spoken to, Market Hardrow? All these kind of lenders that your new brokers that are coming into it, they're probably just looking at these sourcing tables. They're not seeing any of these lenders on there, but they're dealing with so many problems head on and getting them through, especially, obviously don't want to advertise all of the lenders out there, but Family Building Society have become huge for us. Absolutely
we're on the building societies episode, so you can say as many as you like, mate.
Excellent.
It's fine.
All these building societies, do they all have golf days?
Cambridge have a great one.
I tell you what, we do have Monty, and one of my colleagues will really thank me for saying this. There is actually a building societies golf association.
Don't tell them that, Paul. Don't tell them that.
Oldest golf association in financial services, right? And I don't play golf, but I was down there sort of helping them out because it was down at Northampton Golf Club, which is kind of my neck of the woods. And the trophies there are immense. They go back to the 1800s, and we have that once a year. So if you're interested in that, do contact me.
I don't know I'll get an invite back, Paul, if I'm honest, because the last I went to one with a building society who I won't name, and I was on the 9th tee, and I wanted to give this everything because it was the longest drive. So obviously completely revved up, threw everything through, sliced the ball like you wouldn't believe, and it went in a car park and hit a car. So I don't think I'm going to get an invite back to any kind of golf day, probably within the next 6 months at least, until that's forgotten.
Yeah. So as a non-golfer, Paul, who would you say has the best golf day from a non-golfing perspective?
The BSA. The BSA golf day collectively is.
See, this is why another reason why brokers need to engage more with building societies. You see, so but do you on a serious note, do you think building societies do enough to promote their products? Because I think we've all become so reliant on sourcing systems, and I know we've got the criteria sourcing as well. But a lot of these innovations aren't something that you can just naturally, key in and it will come up top 3, because the rate might not be the best rate, but there might be some incredible criteria that's right for the applicant.
Yeah, I think it's a really fine balance, Paul, and I think it's a good point that you make, because clearly if these innovative products were at the top of Best Buy tables, then it would fall over, because just from a capacity perspective. So it's that balance between making sure that the brokers know that these products are there, but also that they're meeting their target market and their target market only. So I think, and this is something that I've wrestled with over a period of time, and it's something that I really want to do a bit more of next year. So next year is the 250th anniversary of the first building society, right? So this is a sector that stood the test of time. But also, I think, where I sit on this is very much that we want to look at that past, and I don't want people looking at our sector in a sepia-tinted way, that's a little bit Hovis and a little bit Cadbury. What I want to do is look back and look at that, that steeped in history, and use that as the inspiration for what the sector does in the future. And of course, we're in a very different place now than we were 250 years ago. We're in a hugely different place than where we were only 5 years ago. And I think for me, it's about how do we take that next step on the journey and give brokers the support that they need through a way that maintains the customer service that's really key to our sector and really does pride themselves on. And I think, from the feedback from the broker community will really help us in shaping that engagement going forward and making sure that these products reach the customers that need them.
Just following on from that, because that's an interesting leads on to technology generally. Now, obviously, a lot of your members don't have the massive budgets that say some of the top lenders do. How are you finding that they're starting to engage in tech? Are you finding it's quite a slow uptake? You've obviously got people like Skipton who are really embracing it and doing it really well. How are your members generally dealing with the whole technology piece?
They are. I think it's top of mind for all of them, because it's really it's really key to their future and how they engage with brokers, with the process, and with consumers. So anything that drives efficiency and ease of doing business is really important to them. But you're absolutely right. If you look at the large banks, for example, you can back a few horses and then see how that plays out over time. If you're a small society, you've not got the budget nor the expertise in-house really to be able to do that. The role that we've tried to play over the last 3 or 4 years with one of my colleagues is to kind of act as a facilitator between the sector and the tech companies that are out there, just to make sure that we can give them the introductions that they need, to give them as much support to engage. And it's almost like giving them the tools to know the right questions to ask over that kind of time horizon. So I think they're all really engaging with it. The pace of change is clearly different, but I sit round just before we have our board meeting once a quarter. We have 3 regional associations, which is gatherings of building society chief executives, where we talk about what's on their mind. And there's a huge amount of technology transformation that's going on in the sector at the moment. So, and I think that will be, one of the biggest themes that continues for the next 2 or 3 years.
It's really interesting talking about this, because the tech company, I've been working with a couple of tech companies that provide software into the industry. And it almost seems as a bit of a paradox, because you've got these entrepreneurial tech firms dealing with these long-standing building societies, and understandably who are very careful about their risk. And you've got the sort of commercial entrepreneurial firms coming in and saying, right, if you use our software, it will reduce your costs, it could increase retention, that sort of thing. And they're coming up against a little bit of a brick wall with some of them, saying, well, actually, that would be too much of a cost to implement, or we're quite happy with the way things are, or, oh, we'll get back to you. What are your thoughts on that?
I think it's difficult, isn't it? Because I think quite often, and this isn't just in the tech space, this is in the kind of green climate change space and a whole host of other spaces. Whenever there's anything that's new, it's sorting out those firms that knock on the door that have got a solution to a problem you didn't know you had, and it's actually understanding how that system will benefit you, and then of course the cost. And we've had a number of conversations with tech firms over the last couple of years, or I have, where they've come to me and said, look, we understand your sector, that not all of them can, have got the budgets for a big capital expense in order to invest in this system change. And where we've started to explore is actually, okay, if we've got this, they're not going to be first mover because the technology needs establishing and we need to know that it works. It's going to deliver some synergy, some efficiencies, and a better experience all around. But actually, is there an opportunity for collectively some of them to come together that then drives the volume that firm, the tech firm, needs on more of an operational expense basis? So we've had some conversations in that place, and I think what that does do is it gives our members the opportunity to harness the latest technology in a lower risk way.
Yeah. See, that's a great idea. So you're seeing a few societies coming together and saying, right, okay, if we collaborate, or we all contribute to the cost, this is going to be, it will dilute that pain for us, sort of thing.
Yeah, and we've seen this in the past as well. So there's a firm called Mutual Vision Technologies. It was founded by a group of building societies and owned by a group of building societies. So that that isn't new, but it's how we can just collaborate to make sure that the tech firm gets the return that it needs. Okay, that is a company at the end of the day that needs to withstand the test of time and make profit, and our sector can access that latest technology. I think it's a win-win all round. It's not always easy, because people have got different value equations at different times and at different steps in the system transformation process. But I think absolutely there is an opportunity for those conversations.
Emma, from a conveyancing perspective, are you seeing some building societies over others leading the way more in this?
I am noticing more building societies cropping up, not only at events. So networks or distributors holding events, you can noticeably tell building societies. I'll pick on family again. I feel really bad. You do notice them popping up an awful lot more. I don't know whether they were probably what I see as a bit of an early adopter of innovation. Were they one of the first ones that did really start to think out the box in ways that they could help, particularly first-time buyers? I know they were one that hit my radar quite early on.
Yeah, I think that's right. I mean, they rebranded a few years ago to Family Building Society and had a look at their strategy.
Yeah, and we do hear more of our brokers talking about building societies. Again, I don't know whether it's more of an education piece that more brokers need. That they do. There does tend to be this. You'll go to the main people that you know that are maybe regularly in your face, and like Paul says,
we talk about this
top because it could topple them over.
We talk about education, don't we, all the time? Oh, yeah, it's an education thing. I'm going to say, what does it mean? We all know what education means, but from a broking perspective, Lee, Monty, when you're looking to find out about a lender, is it pick up the phone to a BDM? Is that the first thing you do?
I think particularly the BDM presence for a building society and a mutual has to be stronger than anyone else, because they're not, as Emma touched on it there, you're not going to see these kind of lenders on sourcing systems. The kind of research you're doing is so detailed that there's too many parameters to put into a sourcing system to find it. So the ability of the BDM there becomes fundamental. So not discrediting other BDMs, but the BDM of a mutual or a building society has got to be so spot on with their criteria and know who they should be speaking to about it and farm out those people. It's a tough job being a BDM for a mutual, but they are so good at it. The ones we have are so good at their jobs. It's unbelievable.
Especially for that kind of institution. And it's not just saying we do this. It's really cultivating that relationship with a broker. And it's quite hard because it might be they'll only get 1 or 2 cases a month, or maybe even 1 case a month. But that 1 case a month can make such a difference. And it's getting under the skin of the broker, understanding where they can help and showing them that actually they can take these difficult cases off their desk and give them a solution. The power of that is absolutely immense. And you're right, Lee. Yeah, because
there's a ripple effect. Because that just echoes out to everyone, doesn't it?
You're not just a salesperson. You're a problem solver. You're helping. You're really making a difference to that broker. And if you've got 10 or 11 different building societies, that can make the difference for a broker between an average month and a really good month, and helping clients and not helping clients. So it's really important. BDMs are especially in the building society space.
Yeah. Paul, from a society perspective, and I'm sure it must be like herding cats a lot of the time, but what's taking a step back, there are rumblings in the industry about the larger lenders, and I'm not saying they are doing anything, and they may not, but people talk and say, look, they may be going back to more and more of a technology-based approach, whereby the broker may not be as required or necessary. And I'm thinking that from a value perspective with building societies, this is where you almost step into that vacuum. And I want to call building societies specialist lenders, and not in the sense that they're taking on, adverse or that sort of thing, but they're really understanding their markets. They're from the experience I have and some of the people we've spoken to. I mean, that great conversation we had a couple of episodes ago with Charlotte Harrison from Skipton. The amount of data that they're looking at in respect of their back books, etc., to be able to support the decisions they're making and the new structures of lending is quite amazing, really. So what do you see and when you're dealing with your members in respect of brokers?
The broker community is really important to our members, and I actually think our members are really important to the broker community. And kind of part of my role is how do we bring those together on that education piece. I mean, you mentioned specialist lending there, and there's a kind of, sometimes that's a euphemism for subprime in some people's minds. And I think the way I think about it is, our members are specialist lenders in that they are specialists in lending. And that doesn't just mean straightforward, straight through cases. I mean, if you look at where we are in terms of buy-to-let, both portfolio and other, shared ownership, punch way above the weight, self-build, foreign nationals, later life lending, and some subprime as well. They do lend right across that spectrum, but what the sector does is you won't see every society lending in every one of those cohorts, because they will make sure that they are specialist in that cohort. So, for example, if somebody goes into shared ownership, they want to be known as a specialist shared ownership lender, not a lender that does shared ownership, and there is a difference. So I think that's key. I think brokers are obviously vital in then making sure that the right customers get access to those products. But I suppose the question for you, Lee and Monty, really is that education piece. Not every society has budget to have big teams of BDMs, right? Do you think there is a role, or could we as the BSA do more to facilitate that kind of education? Clearly, what I can't do is ring up and say, we've got this product with this criteria. But is there something that I can do at the BSA to the broker community that keeps our sector front of mind and kind of provide some direction? And if so, what might that look
I'm not
like?
sure. Forgive me if you do this already, Paul, but for me, roadshows specifically to building societies, doing presentations and things like that, I think we'll get a big take up, especially moving forward now with the way the societies have gone. There's so many niches that is offered by building societies and mutuals now. We touched on it earlier: expat, 6 times income, zero deposit mortgages, all these kinds of things that are just off grid really with so many other people. Brokers' educations are needed hugely at the moment, I think. So having those kind of surveys,
I'd like to see
great.
We sometimes get brokers struggling to place a client, and we will say, have you thought of talking to the building societies? And quite a lot will go, oh, didn't think of that actually. And it's just not always forefront in the mind, and it's definitely go and have a chat. So I agree with Lee. I think regional roadshows, surgeries,
I'd like to see
would
like
be really
a
good for
BSA
brokers.
spotlight series where you basically, whether that's either a podcast or a video or vodcast, where it's actually this week we're spotlighting leads and what they can do in this area, or is it actually you take a subject area that's expats, and actually we're going to talk about expats, and did you know that we've got someone here from Leeds, we've got someone here from Nottingham, we've got that type of thing, because actually I don't see that type of thing, and brokers would love that.
You think of the lenders like, Dudley, Teachers,
Suffolk do
Suffolk.
so many good things.
So many of them are doing so many USPs.
Yeah.
I feel like you've nearly mentioned them all, Lee. So
there's a couple of golf days up in Scout.
Swansea, Principality, Principality are
Beverly, there we go.
Whatever happened to the Mayfair Building Society? But I think to all of your points, this is absolutely it, to create some structure. And what was I was interested in listening to that was that post-COVID, everything went online and we were doing all this that we're doing now. But it seems that there's still very much an appetite for face-to-face events. Is that right?
I've definitely seen a massive increase in particularly the ones we're invited to join, invited to speak at. Yeah. It definitely seems to be much more of an appetite to be out physically
what's been really good
with people.
But what's been really good is some of the networking events where actually, we've started doing one, a property one, and that could be quite interesting from a building society point of view, where actually you get all the BDMs from various building societies and get them together at an event where you're not necessarily speaking or presenting. It's just a networking event, and you get brokers in a room and we just talk and chat generally. And that's how you build relationships. And I think a lot of people like that type of thing rather than a formal presentation now.
Yeah, I think that's something that we really need to consider. I mean, I think, and I would say this, wouldn't I? But I think it's a really exciting time for the mutual sector, because I think there's those three things. I mean, first of all, next year we've got that 250th. That's something that we should celebrate, institutions standing that test of time. We've also got a new government, and you'll have heard this seen it in their manifesto, and also heard the Chancellor talk about this at the Mansion House, which is a plan and desire to double the size of the mutual sector. Yeah. Well, that's really, really important. And how can we support them with that? And we've also got, if you look at the nationwide Virgin activity and the Coventry co-op activity, we've now got the re-establishment of mutually owned business and cooperative banking back in the UK. So those three things, I think, give us a really exciting platform for which to take forward that next step of engagement with the broker community and the consumer base as well. So it's really interesting to hear some of your thoughts about how we might do that effectively.
Paul, do you think moving forward you're going to see more mergers? When you look at like Co-op and Coventry and various other bits and pieces, do you think you're going to see more of these moving forward over the next few years?
In terms of mergers that grow the mutual sector, those two that we've seen, I think strategically there's always mergers in every sector. I can't often get asked, about mergers between building societies and getting fewer and fewer, and I think that kind of conversation has now moved on, and I think those two deals demonstrate that. I think consolidation and mergers in any sector are just they're just a feature. It happens in the banking sector. We've seen that hugely in recent years. So I wouldn't rule out that, but I think where I see the sector now is certainly, in terms of numbers, leaner than it was in pre-2008 or in 2008, but stronger, and delivering more value and better products and a more sustainable business model, and kind of that diversity of business model really driving competition and value for consumers. So I think there will always be mergers and acquisitions and strategic, and I don't think that's a bad thing. I think that hopefully will really deliver value for us in the next couple of years.
We're seeing some building societies really look at affordability, and it's a massive issue across the whole country. Can you see more innovation coming out in that respect in next year?
What, in terms of the way they assess affordability, becoming a bit more innovative? Yeah, I think we need to. I mean, regulation's got a part to play here, right? And I think there is an opportunity with that call for inputs and review post consumer duty. Because if you look at, and this might sound a really controversial thing to say, but I'm going to say it anyway because my PR team are not here with me. One is, if you look at the levels of mortgage arrears right across the country at the moment, and particularly in our sector where it's proportionately lower, and you look at the challenges that we've just come through in terms of COVID and the cost of living crisis, energy costs, food costs, and everything else, wage stagnation up until relatively recent times. On any other time in history, you would have expected to see arrears and possessions really spike, and they haven't, and that's a good thing. But you can't take all of the risk out of mortgage lending. Okay, because life happens. And in most cases of arrears, that is still because life happens, not because lenders have lent responsibly. So I think there's an opportunity or conversation to be had about how do we frame regulation to provide that consumer protection, but accept that life is going to happen and make sure we've got the right framework to support those borrowers when life happens. And we've just seen a change in the way lenders utilise forbearance, for example, being implemented, policy statement 24.2 that came in on at the beginning of November. So I think all of those things, it is time.
Do you want to just elaborate on that for those that are not?
So what that does is effectively, pre-COVID, the arrears policies were, if you were in arrears, you got access to this suite of forbearance tools effectively. Then there was guidance that came out from the FCA during COVID called tailored support guidance. And that said, actually, if somebody tells you that they're going to struggle, extend them access to the same courtesy effectively. That's more complicated than that. And that's now embedded that for the future. So that means actually if you're going to struggle, you get that tailored support for your circumstances from your lender now going forward, which means we can have even more confidence that people are being treated and given access to the right solution for their own financial needs. So I think that, coupled with the affordability and the way just the whole employment market in the UK works, things like gig economy, second jobs or side hustles, as my son told me they're called, right? We just need to make sure that regulation recognises that, and we're not locking people out of the mortgage market that really can afford it and are creditworthy.
My understanding is some lenders, whether they're building societies or not actually, are more wary that they think they're going outside of the regulatory rules and parameters than others.
That's about confidence about how the regulator is going to, how. I can say this because I'm unregulated, and frequently do say this because I'm unregulated. But if you're really an outcomes focused regulator, you need to focus on the outcome, not necessarily the means to achieve that outcome. So what I mean by that is telling everybody the only way you can achieve that outcome is by doing it this way, affordability. And I think we just need to be a little bit bolder in giving lenders latitude to make their own judgment. It's not in lenders' interest to lend irresponsibly and lose money. Nobody wants.
No, exactly. But if you do that, you end up not being a lender anymore, and so you've just
quite. So actually giving them a little bit more flexibility in how you assess that affordability. I mean, lenders are interested in two things, right? Historically, and it always has been. Has somebody got the ability to repay me, and are they likely to repay me? Okay, and we seem to have overcomplicated the recipe with those two ingredients that we need to do from a regulatory perspective. So it's just time, I think, just to think about that a little bit more. But I think what we've seen in our sector in the last couple of years in terms of affordability has really demonstrated that there are ways that you can help people that perhaps wouldn't always be helped by more rigid, straight-through processing lenders. So we will continue to see that because you can't stand still.
So a man with your knowledge, experience, expertise, what are your predictions for next year?
I'm an optimistic person, generally speaking. I think largely it depends on a lot of what the government does, and it always does. But I think we've still got huge pent-up demand for housing in this country. We've still got huge desire for people to own their own homes, and we've got a lending sector and a mortgage broker sector that really wants people to help. That wants to help people to do that. So from those ingredients, I'd be optimistic that we'll have a good year. I suspect we'll see some further interest rate cuts, which will ease affordability as well. And hopefully we'll start to see the beginnings of a coherent housing strategy from the government to start building homes that people need, that people want to live in the places where people need to be. So, I'm pretty optimistic.
So if you could wave a magic wand, and this is totally unregulated conversation going on right now, of course, Building Societies Association PR company note, or PR people. What if you could have like a crazy big idea, that would help the sector, help lending, and you knew you wouldn't fail, what would that idea be?
I think for me, it's about simplifying regulation. Okay, and both the prudential side and on the conduct side. So we've talked about the conduct side. The other thing on the prudential side is, if you think the smallest building societies are subject to exactly the same prudential and capital regulation than the largest systemically important banks, we've now started to have a conversation, and we've seen some proposals from the PRA to simplify that. So I think following that through and making that work for societies would really, really help increase the lending volumes that we start to see and enable them to help more people.
Do you see a disparity between the PRA and the FCA? You go to the FCA with a proposal, for example, and they might say yes to it, and the PRA say no, or vice versa. Do you ever see that scenario?
Not so much in that respect, but I think where we do sometimes see a conflict is the different lenses that those regulators look at things. So, for example, if you're lending to an older borrower, for argument's sake, and this is a piece of work that I undertook in 2015 to increase age limits across the sector and provide more flexibility into the later life lending market because it really, really needed it. If you speak to the FCA about that, they say, well, actually, if you lend to an older borrower and somebody in their 70s, if they get into payment difficulties, you won't repossess them, will you? Of course not. From a prudential regulator perspective, the answer you want is, of course I will. And that's a really extreme example, but those two lenses show one's looking at the kind of financial stability and the other's looking at the consumer outcome. So there's always going to be that tension. But I think actually we work well within that in terms of understanding the operating mandates of both regulators.
That's a great way of explaining it, because to the layperson, understanding why you've got a PRA and an FCA is like, well, what's the point? You're doubling up. But as you say, one is, if you like, the integrity of the actual institution, and one is about the customer outcome.
Yeah, I do think I like to explain things to myself in simple terms. I understand
Me too.
I understand them, most people will.
So Lee and Monty. Oh, Lee, I see you about to ask a question.
I just wanted to ask Paul something, because another one that stood out for me of these stats that you put up the other day was, again, that March to September 24, 14.7 billion in cash savings was done by the Building Societies Association. I'd have thought that was unbelievable. Do you think there's a correlation between having a high street presence and generating that kind of savings? I'm not just talking about nationwide, obviously. A lot of the building societies, they still maintain that high street presence.
Your blurb said about the increase in presence of branches, right? So it's gone from 13% to 33 or something.
Yeah, that's right. So what we've seen, I think the answer to your question is yes, particularly because people when they're starting to engage with financial services want to go and speak to somebody, whether that's a mortgage broker or walk into a branch and get that reassurance that it's there. And we're really proud that a number of our members have been opening branches rather than closing them, which is completely against the tide. And Paul, as you just mentioned, if you look at, in 2012, building societies had 14% of all branches, and it's now 30%. So actually that shows that, again, above kind of natural market share. So I think that really, really helps, and I think it does help with the savings as well. Plus, for the last couple of years, we've had our campaign UK Savings Week, which has really helped to engage consumers and some real engagement on social media as well, and just thinking about the importance of building financial resilience. Because if you can build your own financial resilience, it gives you options, and it's far better for your own mental health, isn't it? And I think that message is starting to get across. I think as well the future of branches is changing. I mean, branches look very different now than they did 10 years ago when you go in them, and also some of our members have been pretty innovative. So one thing we've not touched upon is the kind of community side of what our building society sector brings, given there's no building society headquartered in London. They are in their communities, and the Newcastle had a in Yarm. A few years ago, the local library was going to close down, and they came together, and now it's a branch, and they've kept the local library open, and it's the same outlet. So those kind of things. So you then get that reassurance that you've got somebody to go in to talk to, but it's also had a real tangible community benefit. And I think that's the thing that sometimes is overlooked with our sector when we're just thinking as naturally as we do with the roles we do about the transactional product nature.
Yeah, Lee and Monty, if you've if you had the opportunity to speak to every chief executive of every building society in the land, what question would you ask them? Or would you want to say to them?
I might go down the realms of, if Nationwide can do 6 times income, why can't everyone else? I might start with that. Just because I feel first-time buyers need that assistance. Obviously, they've all got their complexities, but I think first-time buyers are the ones that really need assistance. And it's lovely to see 6 times income coming in, not just Nationwide now. There's a couple of others that are doing it, but
I'd want to know from them how they feel, certainly from a mortgage perspective, they really are looking after their members and their local communities, and see if they really do understand that, if they understand the problems that their members in their areas actually face with regards to getting on the housing ladder, and see what their answer is.
Are you inferring that they're sort of living in lofty heights and not in touch with
I think
the real
a lot
world?
of them, having been lucky enough to speak to a lot of them, actually do understand the issues. And then the follow-up question is, well, how are you actually going to solve their issues, and actually understand what the problems are that they find that they can't solve those issues? What are they doing about it? A lot of them seem to be hamstrung by not just regulation, but risk. And it's actually understanding why can't they take that little bit more risk.
Okay. So, Paul Broadhead, thank you so much for your time today. But before we go, we'd like to know a little bit more about you, because you're an avid Cobblers fan. Is it Northampton Town?
Northampton Town, yes.
Northampton Town, and we were briefly speaking before we started recording. So you started when you moved to Northampton from Manchester, having spent all the time in that place called is it Old Trafford or something? You were a Man U fan, but decided to take your son to a local team and carried on from there. Was that right?
Yeah. So thanks. I mean, I was a frequenter of Old Trafford for 25 years, and thanks for saying that now, after Monty and Emma have asked the questions, as opposed to before, because it might have been slightly different.
You're on the way back.
When I took the BSA job, my youngest was 4 and was an absolute football nut. So I didn't want him growing up thinking football was a TV show. So I took him along to Northampton Town that first year that we moved, and he fell in love with it, and so did I. And we've had our season tickets ever since, and followed him home and away. And it's great fun. Absolutely love it. And again,
I admire. I mean, not only admire fans that support a local team, but to actually go away as well. That is dedication.
Oh yeah, Stockport on a Tuesday night a couple of weeks ago wasn't great, but the fact that we got a last minute equaliser was okay by me. But it's just great. It's great, and it's the thing that I found actually by following Northampton is it is genuinely community and the people that you meet.
Yeah,
and to make it, because if you went there just for the football results, you wouldn't keep going back.
And what are the pies like at Northampton Town?
The pies at Northampton Town, to be honest, are bang average. I think the best ones I've had are Morecambe, Stockport, and Barrow. Barrow of all places.
I love that. I love that your stadiums have pie ratings.
Well, my son used to do that. We went to Bradford City one time. It was my brother-in-law's team, and Josh, my son, was about 6. And he introduced him to the guy that made the pies, and he used to keep almost a league table of where the favourite pies were. And he said to him afterwards, he said, "What did you think of the pies?" He said, "Meat and potato. It was all potato and no meat. 4 out of 10.